Well, the latest to weigh in on Apple and tariffs is Merrill Lynch, saying that the company would have to increase iPhone prices by 20% if they move manufacturing to the U.S. from China. Now, this follows a big back and forth between the company and President Trump. Joining us now to discuss all of this is Raymond James Washington policy analyst Ed Mills and Information Technology Industry Council Executive Vice President of Policy Josh Calmer. Guys, welcome to both of you.
Thank you.
Josh, 20%, that is the estimate on Apple. We got to start there because, you know, this kind of maneuvering, these tariffs, could end up being a job killer, in your opinion.
Absolutely. I mean, what we have said is that the administration is asking the right question by taking a hard look at the relationship with China and being prepared to redefine that relationship. But right now, it's coming up with the wrong answer. Tariffs are counterproductive across the board when it comes to the U.S. economy, to American workers, and to American consumers. The administration's got China's attention. We hope that it will push the pause button on tariffs, or ideally the stop button, and get into negotiations with China and try to bring about a sensible solution to a very legitimate grievance.
Ed, you've got multiple discussions going on right now, whether it is NAFTA or with China or the EU. Robert Lighthizer actually was in Brussels today trying to kind of lay the groundwork for discussions with the Europeans. Who do you think blinks first? Where do you think our best chance of a trade deal is at this point?
Well, I think it is a deal with Canada for NAFTA. Then it is a deal with the EU. And I think with China, it still is a place where it gets a lot worse before it gets better because neither side wants to blink. And I think that Trump is somewhat enjoying this. And if it's only a 20% increase on the production of an iPhone, Trump says, well, let's put a 25% tariff on it, make it cheaper here in the United States than in China. That's not a number that is really scary to the Trump administration, and I think that's what we need to focus on.
Well, these are large numbers, Josh. And, you know, your president, Dean Garfield, your CEO, excuse me, and president, just came back from China last week. What was his reaction? What did he kind of feel was happening on the ground? Because Charlie Gasparino just came on the show and said that he's hearing that the Chinese government officials are actually looking to meet with Wall Street banks to try and figure out how to get around what President Trump is doing.
Well, his reaction is, I think, consistent with what we had been hearing for months and observing for months, which is that the two sides are essentially talking past each other. China has a significant ability to withstand this. They're not substantially moved by the increased tariffs. They would obviously like to bring about an end to the conflict, but they're pursuing interests as well, albeit in an inappropriate way. And so I think Ed's point is the correct one. Unless the cooler heads prevail and there's a genuine attempt to negotiate concrete changes in China's policies, we may see more of this for a while.
Well, there's a lot more to talk about. We didn't have a lot of time with you guys. We had the briefing out of the White House today, but China was a big topic in that one. Josh Calmer and Ed Mills. Gentlemen, thank you for being with us. Appreciate it.
Thank you.